Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 162. Today's December 13th. My name is Cyprian Francis, and with me, as always, the main man of the... Well, you might not be the main man of the hour today, AJ.
Not today.
How you doing, AJ?
I'm doing well. Loving it. Loving life. Loving what's going on in the markets.
Every time I see our commercial, and then our spokesperson says, like, helping you become a better investor, I feel like it's a pretty good time to be an investor these days. Markets are still up here at these highs. What's the vibe for the week from your perspective?
I mean, it's been, we've been talking about weeks to come about how things are, the underpinnings. I keep describing it as, you're building this skyscraper on a really soft foundation, and we don't know what's going to happen. This week, we've been starting to see kind of a pennant pattern forming in the S&P 500. We've been seeing a little bit of unpredictability, perhaps the hints at a reversal or maybe just a stall as we continue. It's kind of unknown right now, but these are kind of the uncertainties that we've been talking about.
Yeah, headlines this week were some inflation numbers
Yeah.
that seem to be in line. The consensus for a rate hike continues to increase, and
I got that right here.
We've got some chip love this morning. So a lot of the same storylines we've covered the past couple of weeks did
you hear that one about China wanting to investigate NVIDIA for monopolies? That caused a little kick in the market earlier this week. That was interesting.
That's true, but on the alternative Broadcom, I'm seeing a lot of headlines on which is having the AI plays is kind of countering that. I see that pulled up the rate.
You got to talk about the Fed. I don't think that the Fed sessions, and it may flip on us in the upcoming sessions, but we talked about over the summer where we finally hit kind of this stasis, right? For years, not years, but a couple of years, the Fed was totally focused on inflation, right? They were raising rates, and then we waited a whole year to see how that played through, and the whole discussion that for a good portion of our shows was inflation. But around the summer, the inflation versus the other mandate of the Fed, which is employment, right? Keeping people employed, started to become another topic, right? That the Fed had to now discuss. When we look at the Fed meeting notes, what we would see is discussions now, instead of just everybody all on board about what's happening with inflation. We're now at this balance point where the Fed is like, do we tweak rates one way or another? How's employment? There's, in their discussions that we read in the meeting minutes that are released a couple weeks after, there's actual debates happening. It's not just all consensus. Let's focus on inflation. So with that said, the employment numbers from last week, we've got CPI this week, which you're right, didn't impress. Producers price index, right? Wholesale inflation kind of surprised people yesterday. It was a little bit higher than expected, and it was higher overall. Maybe it was just a 1 week abnormality. We all know that the Fed doesn't really pay attention to one data report. They've got their feet on a lot of things, but you'll notice that this number here, along with rising bond yields, this number last week we were looking at it, it was around something like, here it is. 1 week ago, it was at 85, 86%. Now it's at 97%. This Fed meeting is next week. It looks like there's going to be a quarter point rate drop.
And I'm assuming the market's pricing that in now, or
yeah. So it's totally priced in, and the only thing that might happen is if it's not that, if it's something different, well, then we'll see a reaction next week. But otherwise, I think it's going to be kind of I don't know if they still say this, but it'll be like a nothing burger.
And then in terms of the S&P or just the overall general market, do you feel like I mean, you did. I guess this would be considered some chop here at these highs. And
Well, you see my indicator, right? And this is that free indicator that people can go and download. We'll talk about that in a little bit, I'm sure. My indicator keeps bouncing back and forth, right? And so I brought up the analog version of my indicator, and you can see that we're not really getting any sort of solid confirmation. A confirmation would be a crossing, a distinct crossing, like we had back here and back here. Not any of this like waffling around the the crossing. So I'm not sure what I think about a potential reversal. We'll see what happens today. We'll see what happens on Monday. But I kind of, I like to keep my drawings up to date. So I'm going to pull those up. The first one I always have is my retracement analysis. And so if I take a look over here, I've kind of, if this is an actual confirmation, it will be a confirmation of a reversal that happened on December 6th, right? Last Friday. That was the highest close that we had. So if we did actually get this confirmation and we're pulling back, then that actually makes sense, and it keeps up with this uptrend that we've been in since when did we calculate it started? Around August 5th. And so it's coming up on like 5-6 months here. But now take a look at my measuring devices. I love my measuring devices. And I didn't even, because it's not a solid confirmation, I didn't fill in the colors like we usually do. But let me pull up this and let me zoom in a little bit for you guys. There we go. So here we go. If we had that reversal, and again, I think that it'll play out for us and tell us for sure if that was a reversal in the next couple of trading days. We're in what I call range contraction mode. We're pulling back. Now, a healthy pullback for an uptrend would be somewhere between, and I've got my numbers calculated automatically, so it goes all the way down to the penny. But basically, if you're writing this down, 5,955 to 6,005, that $50 spread. If we're going to continue with this uptrend, it would be healthy if and ideal if we pulled back to that range. So you might want to write those numbers down, because the other thing is what if we actually pull back even further? We pull back below that 5,955. I actually have my levels set based on my retracement analysis here. 5,955 down to 5,800 and roughly 20. So now you're talking about 135 point spread. If we pull back into that range before we get our next reversal, I'm going to get all excited about selling premium, because it means that the market's going to be entering in probably for the first quarter of 2025, some sideways chop, right? And then, of course, I am watching that lower level that we just mentioned, 5,820 SIP. If we pull back below that 5,820, all hands on deck for a full trend reversal. So right now, I got two questions on my mind. Number one, was last Friday my top? So I'm waiting for a much more solid confirmation of that top from last Friday than what I've gotten so far. And again, I think that'll play out tomorrow, today, or maybe even Monday. And then the next question is how far do we pull back? Because that's really going to dictate for me, not even maybe what's the first quarter of 2025, but also perhaps what's going to be happening for all of 2025.
Yeah, and I feel like as we approach the end of the year, many people will zoom the lens out a little bit to look at the whole 2024. And when you do that, it's a pretty good story. And that 6,000 S&P mark continues to be like a very important psychological level. So just, closing out the year above that 6,000, I think a lot of people would look at 2024 as a positive year, and a great time in 2025 to start thinking about premium selling. If we're going to be seeing that chop, if we're not going to be really breaking, to crazy extreme highs or pulling back too far, that's a great way to use a lot of your strategies in the trading program with premium selling and whatnot. So, that's what we'll continue to dig into a little bit more. But yeah, we've been definitely riding this bull run, for many episodes
Yeah.
on our end. So
And I'm going to continue to say, even though I'm talking leading indicator here, we are completely overbought. This really shouldn't be that sustainable. We're seeing money being drained out of people's, people are digging up their jars in the backyard, money that they've set aside for rainy day, and there really is a lot of FOMO out there in the investing world. People are worried about missing out on Nvidia, on Meta, on all those high flyers. It is the large caps that are pushing this up, but there's a lot of what I call novice money entering the market. So we'll see what happens, but we could be in a period of either who knows, reversal or just some sideways chop for a while.
Yeah, and if you're new to the program, I just threw in AJ's quick links into the chat,
Oh,
which
cool.
gives you a lot of the things that we cover on the show. One, the free indicator, it's starting to get very popular. Getting a lot of people asking about it. As we just looked at on the chart, pretty simple to read. Arrows, blue, red, green, up and down, which can definitely help any of your strategies. We've got the YouTube channel, we've got TikTok, we've got IG, we've got some other freebies, white papers, webinars, a few things like that. We've got AJ's free daily workshop, which essentially will give you 4 of his amazing premium selling strategies. So this is a really good way to get the ball rolling on some of these maybe more complicated premium selling strategies that you discuss or that we discuss on the show. We've got a little bit more about Trading Trainer as a whole, and then one-on-one coaching. So a lot of good stuff here in AJ's quick links. Head on over to the link, sign up, get some more details. We've got special guests today, so maybe
Let's
we
get
should
to it.
we should let them come and talk about since we started the show, AJ, we've been looking for interesting guests to come on, tell their story that can connect with a lot of our members and viewers. And so we found one, and we're going to go ahead and bring him on. I think a lot of our medical viewers, those people that are either doctors or surgeons, working hard to make the world a better place, putting in the hours, but still want to be involved in the investing world and putting their money to work. This is going to be a great time for you guys to tune in and listen to our next guest. So we're going to take a short break. Once we take our break, we'll bring our guests on and we'll talk about making some money, for our medical professionals. So sit tight, folks. We'll be back in a jiffy to get into some more good stuff. So we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So AJ, I know that through your workings on a day-to-day basis, you talk to a lot of medical professionals, a lot of doctors who are, ask you how they can get involved, how they can put their money to work. And a lot of your strategies are great for that because it's end of day positions and stuff, right?
Sure. It's a very special breed. Not just, I would actually even expand it beyond just medical professions. It's really anybody who has one of these careers that they are so passionate about. Anytime I talk to a doctor, a dentist, or somebody who's, in healthcare, they really have given their life over to helping others. And that's their primary goal. But, they also would love to have their dollars working for them behind the scenes. And so that's kind of, anybody who is just so focused on their profession, really, this next guest is going to resonate with you.
Yeah, and I'm always impressed with how intelligent medical professionals are. And so I would assume that with the proper training and education, a lot of that can be transferred into the investment world. And our next guest was kind of on that same journey to become a medical professional. And it seems as if he was persuaded by the sexiness of the financial world and investing in that. And so with that, let's go ahead and bring our special guest on. This is CEO of Lightspeed Trading, Mr. Philip Jayhawk Chan. Philip, good morning.
Look at that handsome guy
joining us.
Look at him.
What's going on, fellas? How you doing, man?
Good.
Pretty good. Pretty good. Philip, I'm interested to learn how did for our viewers, how does one start pursuing a medical career and then move over into the financial world? That seems like a pretty risky life choice, but it seems to be working out for you.
Yeah, well, that's a great question. I initially thought I would be a surgeon. I actually gave up taking over my dad's accounting firm in Hong Kong because I didn't want to wake up in the city. I'm a city boy that loves the suburbs, and I also didn't want to wake up and do people's taxes. So when he was like, "Okay, kiddo, what is it that you want to do?" I said, "I have no clue, but let me explore." And at the time, the medical field really resonated with me, specifically being a surgeon because of the hands-on aspects. Been an athlete my whole life, and also the intellectually challenging aspects, as well as the lucrative career aspects. Now, the thing is, why we're super passionate in doing what we do now is because at the time, right, according to conventional wisdom, and this still kind of, I would say, permeates a lot of societal norms right now, is doctor, lawyer, and engineer, and you will have your life and career set, which, as we all know, in 2024, that is no longer the case. So for me, as I was immersed in the medical training, I had my resume geared up to be a surgeon. I realized that long-term, this would not be a fulfilling path for me, right? Just as a side note, I also have my own personal goals and dreams. I'm Jayhawk raised here in the championship state of Kansas, and that really created this desire to own my own MBA team, right? So I thought, hey, why not go be a team physician? Oh, maybe I hang around the team. But, ultimately I realized, okay, I would still be doing surgeries almost all day, every day. And I really wouldn't be as, integrated with the world of basketball, right, and business the way that I had envisioned to. So I was like, you know what? And nowadays, if you want to own an NBA team, you're looking at $5 to $10 billion anyways. So obviously the surgeon salary plus minus of $500,000 is not going to cut it. So that's when I decided to, make a calculated decision to first and foremost go after mentorships, right? I really, was very intentional in surrounding myself with people who were more successful than me, who already had the life that I wanted to live. I basically, during my master's time, it was really an academic excuse. It was like my own sabbatical, but I was keeping busy, right? Really, I was studying a lot of the successful people, right? Mm-hmm. Studying how, basically the Forbes list made their wealth, right? Binge watching Shark Tank so I can indirectly hang out with Mark Cuban, right? Because he's obviously an NBA team owner.
Mavericks, yeah.
Right, yeah, Mavs. So the whole point is, for me, I recognize the importance of how fast proper mentorship can accelerate you to your success, right? Mm-hmm. In business, they say, if you hang around 5 or 6 millionaires, multimillionaires, or billionaires, you will most likely be the next one. So what I started doing was, studying these successful individuals and also stacking the odds of success in my favor by networking as much as possible in high caliber rooms at high caliber business events, right? Now, I had kind of, been an independent business owner, right? And there were some ups and downs in my own journey, where I really found footing in all things leadership development. So I created my own international consulting firm all around leadership. And as I was networking, right, this was right before the turn of 2023, I met a gentleman. He's also an international city boy, born and raised in London, former internal medicine physician, right? So we kind of just hit it off. He was the last person at that event. Okay. We ended up speaking for an hour and a half and walked out of the event together. And I knew that, long-term, that would be probably the most transformative relationship I have ever encountered in my life thus far. Now, here's the deal. It was right before the turn of 2023. So, my current business partner, who's him now, right? At the time, I really had to reflect, assess, and just see what is it that he is talking about, because he left medicine and he became a bona fide hedge fund manager, successful one, right, for the last 15 years, catering, primarily to our fellow medical professionals first, right, and then the other demographics like business owners, other professionals, IT, CPAs, engineers, etc. Right, but it was really in that moment when we shook hands and just hit it off that I would say set off everything. Now, at the time, like I said, I had my own trajectory. So I was like, let me assess this gentleman's philosophies, strategies, etc. And what I learned was he had the blessing and opportunity to learn from bona fide billionaires in our space. So we specifically trade futures and commodities, right?
Cool.
Where it is regarded as the most lucrative asset class out there, right? Due to its inherent risk and volatility, right? So a lot of people, just so the audience did not know, right? You've got traditional assets like stocks, bonds, treasury notes, mutual funds, right? Colleges even, right? And real estate, of course. But where we reside specifically is within the derivatives of alternative investments, right? So I did not know this at the time. I mean, I'm just kind of giving you that high level overview. So, there's a great man named John Arnold who took 1.5 million to 1.5 billion in 2.5 years, trading the commodity natural gas the right way. Okay. If you look him up right now, he's currently ranked 395 or 400 on Forbes with a net worth of $3 billion. He was coined the youngest self-made billionaire at age 33 back in 2007. People were saying had he kept going, he would most likely eclipse Warren Buffett with the rate of his growth, right? Now, after he became a billionaire, he became philanthropic, which is great for him, but he basically stopped doing what he was doing. And so for us, it was really like, wow, we would love to see what could have been. And so in a way, we're kind of like the modern day John Arnold, carrying that baton. We also take pride in basically, not having, I would say, very similar intentions as our typical fellow hedge fund managers that are mainly focused on growing their AUM, right? Assets under management. Whereas we are super passionate about creating exposure and awareness, right? Because we feel strongly that regardless if anyone decides to do anything with these markets, they should at least know about it, right? So that's kind of where, I was pleasantly surprised, but obviously shocked at the beginning when I learned, that this space exists. Because you have to realize just by having a conversation about this, it puts us in the circle of the ultra wealthy, right? We always talk about it internally, right? We're not here to get your regular masters of business administration, right? We're here for a real life MBA, which is a massive bank account. That's what matters here in the real world.
Yeah.
So in a high level overview summary, how I got started, I was an aspiring surgeon. Jayhawk raised from Kansas with the influence of Kansas, wanted to own my own MBA team, realized that surgery was not for me, put myself in a position towards success by first and foremost studying success, wealthy people, Forbes list, hung around with high caliber people in hopes of getting high caliber, relationships. And through all of that led me to meeting my current business partner now, where initially I actually started as a client. Remember, this is before the 2023. So after I assessed, what he was saying to me, I took a leap of faith. Okay. I revamped like 85 to 95% of my schedule heading into that 2023. Right. And that's when, life really began to change for me, because initially I learned how to take a couple $100 to over a couple $1,000, but that was very insignificant compared to the intimate client conversations that we were able to have. Right. Because during those conversations, when we really dissected and were identified opportunities for synergistic growth. So what happened was we gave each other a business partnership test trial, right? My business partner delivered, I delivered, and the rest is now history.
That was the origin story for Lightspeed investing, right?
Yes, sir. Yeah,
And
Lightspeed investing is basically the semblance of our joint venture relationship, as he's a
so it's a fund.
Me as well, right?
it's a fund that people like. People, is there an amount of asset that somebody has to be part of this fund? How does that work? How did
Yeah,
they just?
So at this point, right? Please understand when I say this. At this time, we've been doing this game for 15 years. So we're doers who happens to educate, right? Accredited investors at our firm specifically starts at 5 million and up. Most people, right, that their companies, they will say accredited investors is 100K and up, right? For us, it's 5 million up. But here's the deal: we recognize that not everyone has that kind of capital. So we manage money for high net worth individuals, 5 million up. But if you do not have that capital, we teach you how to get there. Right. And I recently actually also started a non-accredited investor division that I'm very proud of, because now it opens up doors to people who may only have anywhere between 5 to 100K. They still want to take advantage of, market movements and growing their capital. So, we come up with a very robust and structured methodology for them to still be able to reap those benefits, right? In a very surgically precise and methodological, and I would say methodical way. Yeah.
Now let me ask you, because before you came on, I was kind of broadening the scope. You're not just looking for medical professionals. You're basically any of these folks, and I've encountered some of these folks in what I do. There's some folks out there that they just are not going to be day traders, right? Because they want to give their time to their profession, right? But they still want, they're probably earning a lot of money. They still want that money to be working for them, but their main goal is whatever they've studied. They're like way into it. And it doesn't necessarily have to be doctors, does it? It could be, like you said, engineers or lawyers. They're just way into the game that they're playing. But they look back at their bank account and they're like, dude, I need to do something with this, but I maybe don't want to like do AJ's program where he's, you have to get involved even if you are an end of day trader. I kind of want somebody to do this for me. And that's who would come find you, right?
Absolutely. So the way we approach every conversation, first and foremost, similar to medicine, is we like to perform a proper business diagnosis before ever prescribing a relevant business prescription, right? Now, in this specific case, we are not your typical day traders, because specifically within commodities, right, we're looking to be surgically precise. We're in and out of trades within minutes. And when I say a day, we're really talking about half an hour to an hour and a half. Nice. So, for us, we're high frequency traders, right? Now, this is an active skill set that you can learn, and similar to all high income skill sets, if you're willing to really commit to this, right? Not only can you have it for the rest of your life, but the better you get at it, the more profits and income you can garner, right? Obviously.
And I love that you guys are into futures, because most of the folks focusing on this show are into options. They're both derivatives. Futures are typically derivatives on commodities, and options are derivatives on equities. So it's kind of a similar. You're taking advantage of all those different investments that you can do because you're into the derivatives. That's awesome.
Absolutely. And derivatives is so lucrative inherently, like I said, because of the risk and volatility, right? So fun fact, right? When I was doing my due diligence, what you would realize if you studied Forbes and you studied this space intently, you would find that futures creates a lot of billionaires. And on average, these billionaires are 30 years younger than real estate billionaires. Okay. So for example, the other gentleman outside of John Arnold, is Mr. James Simmons. James Simmons was a renowned applied mathematician for pretty much most of his life. Recently passed away at age 86, CEO of Renaissance Technologies, with a net worth of $30 billion, right? Just a little bit over that. But the most interesting thing, fellas, is that it did not take him his entire lifetime to amass that wealth. It only took him about 15, 16 years, right? Because for him, he was the pioneer in our field that basically figured out automated software trading across multiple markets. So in a medical sense, you have John Arnold, who's basically the world-class surgeon, right? But a world-class surgeon is only capped, with his phenomenal hands being able to work at one or two patients. In this case, one or two markets. He dominated natural gas, and that was his thing. On the other hand, James Simmons, he is basically the innovator that figured out automated robotic surgery across multiple patients, right? In this case, multiple markets. So For us, our firm
Cyberknife.
seeks to absorb and combine these two giants methodologies, right? And we've obviously added our own spin on it, coming from the medical field with additional prudence, professionalism, and ethics, right, on top of their approaches to make it as sound and robust for those interested in the markets, right? Because again, what we do, and another thing that actually separates us, is that not only do we teach you at night, but we actually prove what we teach. We go live and we clear someone's annual salary in front of you.
In fact, I think
yeah.
Oh, go ahead.
So I was going to say, I'm talking about a minimum of $50,000 made in front of your eyes on average between 100 to 150K, right? And so,
Wow.
and the idea here is to not impress anyone, is to showcase what is possible if you are able to approach the markets with surgical precision, right?
Yeah.
So maybe the first time you're like, oh, how is this possible? This is totally fake. Well, hey, come again. Okay, maybe the second time you're like, oh, it's just a coincidence. But I think, if the third, fourth, fifth, and sixth time you keep seeing this as a recurring phenomenon, now it warrants a conversation of substance and depth, right? And that's what we're passionate about.
And for our viewers out there, we've got one of your technicians on that's going to look at my pick of the day and also our viewer picks. So we'll get kind of our own little flavor today, right now. But so how does somebody, Philip, like find out whether or not they should learn from you, or whether or not you would be able to manage their money? What's that process look like? What do they do?
Yeah, well, the first step is a conversation, right? Now, the conversation can be made a lot easier, I think. If they're interested, they can always join our monthly physician investing masterclass. It's a virtual event that we host at the last Tuesday of every month, minus this December, obviously, because of the holidays. So actually in January, we're probably looking to do 2 of them. So, there's different, I would say, ways. Someone can message me on LinkedIn and just to, start a conversation. There's also, I believe, my Calendly here that you're listing.
I think that we put those links right into the chat. That's awesome.
Right. And similar to you guys, we also have our own Lightspeed Investing podcast as well, right, where we provide educational value, showcasing interviews with fellow investors, physicians, successful clients, as well as high-level business owners and entrepreneurs.
Nice.
Awesome. All right, Philip. Well, we'll keep you on the line as we, go through AJ's pick of the week and some of his speed round. But let's go ahead and bring in your counterpart, someone from your team. This is Jofer Itaas. How you doing, Jofer? Welcome to the show.
Thank you guys for having me. It's great to be here. I'm excited to see what's going on because, like AJ was saying, options is basically the twin brother of futures on the other side of things. So this is my specialty, blending with your specialty. So I would like to see how we can make everything just.
Yeah, let's do it. Let's do it.
Awesome. And so, as you mentioned on the show, we take a view at a name that AJ's looking at that he likes, where we can implement some of his awesome premium selling, sometimes not premium selling option strategies. And then we've got a couple names from our audience of viewers who just have questions on whether there's an opportunity. So let's go ahead, AJ, and pull up your pick of the week this week. And that is going to be CSX Corp, ticker symbol CX or CSX. What are you liking about this? What got your attention?
Well, first of all, I got to thank again the folks that are in our program, our premium selling program. Every Thursday, so last night, we get together and do a workshop where they just throw candidates at me left and right, and then we pick one of those candidates. We look at them all, and we talk about them all, and then we pick one and we plan out the trade. Now, CSX was not one that we picked, but it is one that was thrown at me. And so I looked at it a little bit last night. This is one that actually has been on my watch list for years. This is a railway play. And I was looking at this pattern forming. One thing I like about CSX is that there's a lot of activity in the option chain. So you don't have to worry about liquidity. So, some of these option chains are just all but dead. And so that, even though the underlying symbol pattern might be pretty fantastic, if there's no activity in the option, you're not going to be able to do any of your magic, right? So the scoop is we're coming down. We've got this tested level of support down here, probably around this $33 mark. And so I'm watching that. And I'm watching that for a bottom reversal. And I switched gears on you guys. I totally pulled up my other free indicator called the Confirming Indicator MACD. And you'll notice I've got it set. We've talked about it in the past, but I've got it set for the fast MACD, 619.3, instead of the standard, which is 1226.9. So I've got it 619.3. And then with my indicator, don't forget, we can calculate it on different seed numbers instead of just the typical, which is closing price. You'll see I'm using volume weighted average price, which gives me a little bit more validation to the signal. So I switched gears on you for finding a top and a bottom. Remember, I do everything end of day, so I'm not going to look for these signals until after the market's closed. In fact, I'm going to wait till my toddler's asleep, and then I'll be looking at these and looking for my little arrow. But I'm looking for one of my light blue arrows to appear here, telling me that a bottom has been found. And that's going to be an opportunity for me to get into the initial covering position of this symbol. So I'm going to be buying the stock, or there's a substitute option I was looking at. It's out in September of 2025. It's the 2250 call. That one we call it trading at parity. It'll pretty much move dollar for dollar with the underlying stock, only it's a lot cheaper, right? And so I could see buying either one of those. If I buy the stock, I have to buy it in lots of 100. Remember, options are traded in contracts, which are lots of 100. So I'm either going to buy 100 shares of the stock, or I'm going to buy one contract, or however many contracts of the substitute option call. And then I'll be in a cool pole position waiting for either the next top, where, if it goes really high, I'll just liquidate it, take my money and run. Or if it doesn't go so high, if it stays in this range, jackpot, that's my income trade, right? I'll put a collar on it, meaning I'll sell premium, buy a protective option, rinse and repeat every month. So I just wanted to highlight it for you guys because I think that we're coming up. I don't want to get into this till I identify my bottom. So nobody jump on this trade right away. Instead, let's wait for that bottom. Let's wait till we see the whites of their eyes, and then pull the trigger on getting an initial covering position in place.
And Jofer, do you kind of agree with some of AJ's analysis there from what you're seeing, some of your technical tools?
Yeah, definitely. So we do use VWAP as well, but your chart is definitely a whole heck of a lot different than ours. But the bottom that he's talking about, it looks like a solid foundation. If you drew a trend line there, you've touched it multiple times at this point, and it's tested the high. So I figured exactly what AJ's thinking is that it's going to drop one more time, and if it does hold, he should get that blue arrow he's talking about.
Yeah. Well, that makes me curious. What's your chart look like? Do you want to share it?
I don't have it up currently.
No worries. No worries.
But hey, Jofer, you can maybe share some insights in regards to what we like to look at, which is algorithm numbers.
Yeah, definitely. So there's a bunch of things. So we use the YM futures.
Nice.
So it's $5 a point per contract, and we use the eight SMAs, the 20, the 200 SMAs. Those are our main lines that we follow along with the VWAP. And also we have the parabolic SARs, our buying dots, which are sort of similar to your arrows, but like Philip was saying, we are high frequency traders, so those populate a whole heck of a lot faster on the minute time frames, 5 minute time frames, whatever that looks like for us. But it's fairly similar to what it is here. As far as foundation goes, if you can identify a bottom and a top, you can play the range however you like. And
absolutely,
simple as that sometimes.
Jofer, that's awesome, man. Good insights.
And now, fellas, I'm actually just a little bit curious. Do you guys mainly do day trades when it comes to stock options, or the swing trades, or what's your kind of like ratio?
So what I'm trying to do is I'm trying to find these ones that are boring and absolutely just stuck in a sideways channel. And what I'll be doing is I'll be establishing an initial position, and then every time it tops out, what I'm going to do is I'm going to sell some option premium that's going to expire probably 3 to 5 weeks. And I'm going to use that money to subsidize a protective option. So I make money when it goes down. And then as soon as it hits a bottom, I'm going to liquidate that protective option, roll it to the next one, and I'm going to start the process all over again. So it just becomes an income generator every month, every expiration.
And you don't like to wait for the market to go up. You love the shorting, huh?
Well, I'll do it either way. So in this case, we're finding a bottom. But if we were up here finding a top a couple weeks ago, then I would totally short the symbol or buy a substitute put option. But yeah, I like the ones that basically create this ongoing income, because one of the things I don't want to do is spend all my time researching underlying symbols. So if I can stay in an underlying symbol and then make these adjustment trades every few weeks on it and create this income on it, that's less research time for me.
Awesome. So that's what AJ's liking
That's
this
my
week.
pick of the week.
CSX Corp. We've got a couple names, a couple other names from our viewers, and we can run through these rather quickly, AJ, in the sense of, do you like it? Do you not? Do you see an opportunity? What are some, because it's not always premium selling. Oh, during earnings season, we have been looking at a couple of those calendar volatility
calendar spreads,
stretches, which are maybe a little bit more in line with what the fellas at Lightspeed are doing. But with that said, let's see if there's some opportunities just with the great minds that we have on the line today.
Yeah.
So our first name is Cheryl out of Hartford, Connecticut, and she wants to know our thoughts on American International Group, ticker symbol AIG.
AIG.
Who was the big, what is it?
Remember that?
When
15
we
years
were
ago?
crashing, right?
Yeah, more than 15 years ago, 17 years ago. They were the insurance company insuring. Anyway, there's sideways, right? I like that because anytime I see sideways, most people run, and I'm like, give me the income, give me the income. I see it coming down, Cheryl. I think I see what you're seeing. I love this company, right? Because they're a solid company. They're always making positive earnings. They're giving dividends back, meaning that the investors of the underlying may not be interested in asset appreciation. They may be there just to collect the quarterly dividends. So they're not going to be, kicking my pattern out of its channel prematurely. So, hey, man, let's find a bottom and get into this again. Buy the stock, buy the substitute option. I'm game for this, Cheryl. And I just let's see how low it can go before we get in. Buy low and then sell high.
It seems as if that 70 mark might be a level of support.
Yeah,
maybe
70, 71, somewhere between those numbers. You're right, Sip. What do you think, Jofer?
Yeah, I'm looking at because on the green it looks like it's headed up. This might start to move up and you might get that blue arrow soon, because if you look at the bottoms, they are all ascending patterns. So if it breaks upwards and it goes maybe above 76, 77-ish, it could go back up to the high of maybe around 80, possibly. So your arrow should, in theory, populate sooner than later.
Yeah, we got that little range there to work with. All right, Cheryl, thank you for that. Moving on to our second name. Hot topic across the globe is just the auto industry. A lot of changes happening, but this is one of the OGs. Billy from Detroit, Michigan wants to know what's going on with Ford.
Ford looks like it is consolidating here. Let me look at the option chain really quick. So I'm going to use our options lookup tool here that you guys can get access to. If you go over to that quick links page that Sip talked about and go to the other freebies, we're not going to be giving this away for much longer. We're still kind of beta testing it. Soon we're going to charge for it, but go get in there now. I'm going to pull up Ford. I'm going to look at a couple of different strikes. I'm going to look at the most recent, but don't forget you can go back to, the beginning of time here with our historical options lookup. And what I'm interested in is, if I'm using protective options, I'm going to go about 3 to 6 months out. So I'm thinking somewhere between March and June. There just happens to be a March and June option here anyway. I'm going to look at the March options, And this is what I wanted to know. I wanted to make sure that Ford is trading every dollar, right? You can see that the strike prices are every dollar. So if we're architecting an option strategy, it's going to be kind of cool that it's every dollar, because look, it's trading basically between $10.50 and $11.50.
Mhm.
So, if you're going to use an option strategy, you got to make sure, if it's the more traditional where it would be $10, $12.50, $15, you're not going to be able to do that, architect that strategy that we're looking for. But hey, I think that you're onto something here. Again, I think you're looking for a bottom and you're asking me if that's what I would be looking for. Absolutely. If you're in one of your trades already, this would be a great opportunity to sell put premium. If you're shorted, it depends on what your initial covering position is. The only thing that worries me a little bit about Ford is simply that it's kind of tight, right? It's tight. It's not expanding well enough. So you're going to be a little bit more faster. You have to be more diligent. Maybe this fast MACD isn't even fast enough. You're going to have to find some sort of way of identifying your bottoms and tops faster. What do you think, Jofer?
Yeah, definitely agree. It's a big consolidation for the last months or so. So if you're going to take a position, I would say take that position, but keep a very close full eye on it, because it could pop either way sooner than later. And when it does, it could be a big move.
And I know that we all, like my viewers, like to leg into positions. Realize that, again, that consolidation pattern, like Jofer's talking about, a lot of times those are buildups to a breakout. And a lot of times we don't know if that breakout's up or down. If you have the collar in place, the second part after you leg into the initial position, that collar is going to self-adjust, right? If it goes outside of the channel, you'll get exercised at max profit, or you'll get protected with your protective option to the bottom side. So you don't have to white knuckle it. But I remember when I was on the floor, there would be this phrase some of the runners would say, which would be, don't be a dick for a tick, right? So I'm all for legging into your position, but put the collar on sooner than later in this case. Have it so that you don't have to worry about if it breaks, whether you're going to be bankrupt the next day or rich the next day. Just get that collar in place and turn it into your investment trade. That's my 2 cents on Ford.
It's crazy. I just looked up Ford's market cap, which is 41 billion, and then you compare that to Elon Musk's net worth of 400 billion as of this week. He could literally just buy them out himself, and it's just a crazy stat to see that these are two competitors and how quickly Tesla, for example, has surpassed Ford. And maybe if Ford could do some innovative things like Tesla, that they could increase this market cap and the stock price. So,
the scoop is Ford, I love my Lightning, but I got to tell you, Ford and GM just made those announcements that they're putting holds on their EV stuff. So I don't think they're looking for anything forward looking the way that Tesla has. I think they're trying just to keep their business in shape.
That's crazy, since they pretty much invented the modern day vehicle. All right, cool. Thank you for that, Billy. Our third and final name is a name, AJ, that we cover a lot, and one that even during the COVID, post-COVID, we looked at a handful of times. So Jeff, down south in Fort Lauderdale, Florida, wants to know, do we have an opportunity in Carnival Cruise Line, ticker symbol CCL?
So this is probably not one of your premium trades. This has been uptrending for a while. I'd be looking at this for two things. One would be a swing trade, where I could use an option strategy in order to kind of supercharge the swing trade. And I'd also be looking at, because it kind of looks like it's getting tired here, I'd be looking at maybe a trend reversal trade. So again, the option strategy is secondary here. You could do a deep in the money option, so you'd get almost like a parity type move, but at a leveraged price, or you could play with some out of the money options. But the key here is, paying attention to your swing trading models or your trend reversal models. What do you think, Joe?
Yeah, trend reversal sounds about right, especially if it gets through $25. That's a lot of space for it to just free fall because it's gone up 2x in what, 4 months or something like that. So that's a lot of
And
money to make.
it's a cruise line. So what are they doing different? Probably not
Yeah,
much.
exactly.
Or it's maybe a longer term rebound from some lows over the past couple of years, just because
That's
of
a good point, Sip, because a lot of times we need to kind of zoom out and pay attention to, we call those fractal patterns. Pay attention to the bigger picture. Don't just look at the tip of your nose. This is a 10-year chart. Each one of these bars represents a month. And yeah, so at one point before COVID, Carnival Cruise Line was trading. Maybe this is a move back to parity, but I'm not sure. It actually, I'm with Jofer. It looks like it's weakening here. It's kind of overbought.
Maybe it's one of these Trump trade names where the optimism for the hospitality cruising industry is very high because they're not going to get shut down under his presidency. I don't know. There's some psychology to all of these plays. Anyways, Jeff,
The whole
hopefully
thing
that
behind that is just unpredictability is in our future, right? We don't know what's going to happen.
All right, Jeff. Hopefully that was a little bit of quality insight. Jofer, thank you for hopping on and give us some analysis. Philip, thank you for joining us as well. Let's go ahead and pull up your LinkedIn real quick. We did throw a link to Philip's Calendly in the chat. So if you want to learn more about Lightspeed investing, the program, go and book a call. It sounds like they're doing some pretty cool stuff. And yeah, the links are all there. Thank you both, gentlemen, for joining us today on the AJ Brown Show.
Thank you guys for having us.
Yeah, thank you. It was fun. Let's do it again.
Yeah, definitely, guys. Go viewers, go check out the LinkedIn and maybe get yourself an appointment on Philip's calendar. That I might do the same.
Well, and I would say, the most important thing, if it's medical professionals listening in, please understand that we do host that monthly physician investing masterclass, and we have a lot of fun there. So,
Is it only for physicians?
That one is physicians only. Yeah.
Okay.
Well, physicians and medical professionals only. So we don't discriminate, right? We welcome MDs, DOs, dentists, anyone who is active in the medical field looking to enhance both their business and investing acumen in this.
Awesome. So we'll get the link and follow up with everybody. Philip, Jofer, thank you once again for joining us. I hope you guys enjoy the rest of your weekend. Have a happy holidays and all the best success, heading into 2025 for you guys.
Absolutely, man. I love what you guys are doing here as well. Let's stay in touch and talk more options sometimes. All right.
Awesome.
All right, fellas, take it easy. All right, AJ. Good stuff. We've had a couple futures traders on the show. Definitely a lot of potential reward, a lot of potential risk too. So you want to have the proper education and support before you dive into some of these maybe alternative, more exotic industries. Even in some of the option strategies that we talk about can be considered rather risky, but that's why you want to work with a professional, with a team. That's why you created Trading Trainer over almost 21 years, right? We're about to hit 21 years to create a community, to educate, to get people the information that they need so they can make some solid investments and some good returns. And at the end of the day, sleep well at night, right? Like you want to be doing things that doesn't turn your stomach, that you have confidence in. So thank you to Philip and Jofer for joining us. Looks like we're getting close to the end of the show here. AJ, we've got the Fed next week. That's pretty much what we're keeping an eye on, right?
And retail sales. I'm a big fan of looking at retail sales. That comes out early next week on Tuesday, I believe. And then we'll see what the Fed has to say. But again, I don't think that it's going to move the markets too much. I think everything's priced in. I think that it's, the Fed meetings are not what they, aren't the focus that people have anymore. I think the focus right now is what's going to happen in January when, new fiscal policy comes around, or discussion, rhetoric around new fiscal policy comes around.
Yeah, I imagine this presidential session will be a little bit less exotic than it was the last time around. That's just my personal opinion.
I hope so.
But I hope so too, because I do think there's some decent policy ideas, and seems like we really just want America to win, and I think we're all for that. So we'll keep an eye on that. Next week we'll do the show and cover the Fed and the retail sales. We'll see what impact that has. And yeah, as always, if you want to learn a little bit more about Trading Trainer, get access to that indicator, check out AJ's free webinar. The links to that are in the chat. Let's go ahead and pull up the link here as well. And if you want to just join, follow along, tune in on some of our shows, on some of our other social channels, head on over to that links page, hit that like, hit that follow, hit that subscribe button, and we'll continue to do our best to bring you the best content in options and investing trading on the planet. AJ, thank you again for your time today. Thank you to all the viewers for joining us. Thank you to our guests. We do appreciate everyone tuning in and giving us some love. That's all I got. We'll see you guys next week.
All right. Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content